Alright, so today is basically it. Currently Sunday. I'm gonna show you guys something I've been wanting to show you. So I'm gonna pull up the economic calendar though. So today again is Sunday. We're gonna have news, blah blah blah, for no major news events. Just here's the account. Same thing really. Something I did do this weekend was review the trades. I'm still yet to do my trading homework, but I'm gonna show you guys what I've been doing. I reviewed all these trades already. Actually, I should say I reviewed from Gold Friday. I'm still stuck about this one, but nonetheless, we can't really do anything. So just focusing on what improvements I can make on my trades. And I've been finding a lot of little bit of details, little key details that I need to improve in my trading. So here again in that entry before 9:30, writing that down. Whenever I'm doing the trade recaps, they're in the moment. You can't really see what happens after. Of course, you can see what happens like 15 minutes or like a little bit after. I'm not gonna wait for like the whole day to journal this trade. I usually wait a couple of minutes, journal the trade. And the thing is, I stop at the 4 hour. This is the thing I've been watching. I stop at the 4 hour. You can't really see how the daily candle or the 4 hour candle is forming to give you a little bit more confluence. And that's kind of why we don't really need to see the daily and the weekly. That's what I was thinking. But as of right now, like for certain trades, you don't really need to go higher than the 4 hour. That's kind of why I capped it at the 4 hour, because I was reviewing. I was like, what could I have done better? That made me think about I'm unable to like really dive deep into these trade details, since we don't have like the other confluences on the other time frames like the daily and the weekly. Sometimes even it's just the daily, and I thought to myself, let's backtest these trades. And that's all I've been doing today, is backtesting these trades. I created a new, for some trades, like they're like, my conviction was like good. We had a 4 hour BISI, we had a 1 hour BISI, we had a 15, and then a 1 minute. What went wrong? Like, was it a daily confluence? Was it a weekly confluence? What was it? And that's kind of what we've been doing today. So I finished all these right here. I'm currently on my last one for GPB 0605. So that was July. That was like my first trade, my very first trade. I'm still like, I'm just like confused, like what? So we had a 4 hour BISI. I'm looking at that 15-minute, balance price range, and 1 minute breaker and inversion. I was like, what? I'm thinking, I was like, what could I have done better? We got to go look at the other time frames now. But for the past couple of trades here, you can see we've basically reviewed. So on the weekly, we had the weekly retracement standard deviations. We hit that. We're like, wait, we could have just waited, we could have just seen this coming for this week. This is where you target, and once you hit your target, you just walk away. Simple as that. You go trade a different market that is aiming for a target. Or so you can see here, we had a 4 hour BISI, another one disrespected. Boom, we dropped. Reaching for the daily buy side imbalance. 1 hour time frame, we had all this right here form. All these PDA rates are nice, but what overpowers that? The weekly and the daily. And these were telling me retracement. What is more powerful though at the end of the day is the weekly. So whenever the weekly is done retracing back down into a discount, if it does, or if the buy side imbalance then moves higher, that's all you need, because it's gonna form a mitigation block. New target right here from this retracement. You go with the flow. You take it day by day. Of course, if you're profitable, you're gonna pass the account. If you have good risk management, trading is just 90% psychological. That's all it is. 10% analytic. And at the rate I'm reviewing a lot of stuff, constantly journaling, constantly knowing what I'm doing wrong, it's not even like technical anymore. It's not even analytical. It's just like my mind, of like, I know what I need to do. I know what I need to avoid, but I just don't do it. Why didn't I do it? Because I get emotional over logic, and I make certain mistakes. I'm not really, at a level head where I can think things through. I can process it. I can be super rational, and the mistakes are made when I'm irrational, when I'm emotional, when I'm trying to rush it, when I'm impatient, and it's really just that. It's not even like technical anymore. It's like not even analytical. It's not even like confluence form or PDRAs, or like, it just isn't even like market structure. It isn't like it isn't like what I'm trading at all. It's just psychological, really. After you have your strategy down and all that, it's really just psychological. And I've been here before, but yeah, that's really it. I'm gonna continue to backtest, journal, and I'll update you guys throughout the week. Peace. All right, guys, so it's Tuesday, 7/07/16/24. You can see that down there. We're down just a little bit over 1% for the week right here. So, but overall total, you can see the total percentage. Today was a small, like near a little bit like 1.5, I should say, just near 1.5. It wasn't really too much, but just a little bit, too much. Today's Tuesday. We didn't really have much news other than 8:30. Beginning of the week, honestly, really isn't starting off so hot. I'm going to be waiting, of course. And the risk management wasn't really the best on gold, but for USD JPY also, it wasn't really the best. And I'm going to give you guys a breakdown of what I really plan on doing. So this was the second trade. This is the first one here. With this one, we lost over a little bit of 1%. And I already know what I did wrong. Like I said today, we didn't really have a 4 hour confluence. Nothing on the 4 hour really formed. We should have been waiting for this retracement to look for longs. We should have been shorting on the daily time frame. Again, this is where the daily buy side imbalance and the order block is. And since we had no 4 hour confluence here, we should have not been on the 15. And this is kind of where the 15 and the 1 hour were, again, together. So again, three time frames with 3 different PDRAs isn't high confluence. We have a 1 hour, 15, and then the 1 minute. That's not really high confluence. You need a 4 hour, 1 hour, 15, and then a 1 minute. That is still high confluence, but what I'm really looking for is a daily 4 hour, 1 hour, 15, and a 1 minute. So 5 time frames. I usually look for 4, but as of recently, I'm looking for 5, because for 5, that will alleviate a lot more. That would alleviate a lot of the the movement where we're not going to be moving as much. So again, we had a 4-hour order block and then a 4-hour buy side imbalance. We reached this high and we never really came back down. On the 1 hour time frame, this is kind of where we started to scale down, because we saw 1 hour inversion form, and then we started to retrace. We're like, all right, we're gonna bounce into this and then probably move lower. And then on the 15, that gave me a little bit more confirmation for the 1 hour. And here we had a bearish breaker form, and then we had a SIBI. As soon as we were tapping up into the SIBI, right around here, I was looking for shorts, because to me that looked like very, very clear. We're gonna move down, target this right here. And I was trying to, again, the risk wasn't really the best. I was trying to calculate the risk, but it just was giving me like 1 lot, 2 lots, a 90 point stop around there. If you watch the Telegram trade recap, I'll go over it. But yeah, it just wasn't really giving us a clear risk percentage to risk for the lot size. So that's kind of why I'm just like, I'm down the risk. I sliced it in half. But yeah, we used the 15-minute confluence as a means to push us lower, and then we had a 1 hour or 1 minute. I keep saying 1 hour for the 1 minute. I don't know why, but we had a 1 minute inversion, a bearish inversion. We disrespected it. We went up, we tapped up into it, we started moving lower. Key sign right there that the market is likely to reverse, have this lower time for market maker sell model, and then continue lower. A breaker market structure, an intermediate term low right here. That was very, very key. It was a very key confluence right there. As soon as I saw that form, I knew the fair value was going to form, and then we entered. Our original stop loss was up here, but we trailed it back down because again, it was up here, and then we moved it right here. But I moved it right here because again, it was just way too much risk. Even a couple of points was way too much risk. I'm not willing to lose that much. And then for the second trade, it was USD JPY. We had a buy side imbalance form here, but we don't have any daily or weekly PDRAs. We do have the weekly inversion, but we are forming a weekly sell side imbalance. Then we have a daily sell side imbalance here so that we can retrace up into. That's kind of why I was taking longs. 4-hour order block, 4-hour BISI, 4-hour breaker down here that formed. On the lower time frame was like a 1-hour breaker though, and we were just using that as standard deviation targets to push higher and move higher. You can have the 1 hour standard deviations be met, but you're gonna want to have that weekly or daily PDRA, have those hourly standard deviations met. And then on the 1 hour we had a 1 hour inversion and then a 1 hour BISI. So we tapped up into the inverse. We were just, again, we weren't really waiting for this because we already tapped up into the inversion. We were closing up. I thought we were going to move higher, take out this high, probably leave this as a breakaway gap and continue higher since we already redelivered into this one. We don't really need to redeliver into this one. And I thought, we're just going to continue higher, but it never really happened. On the 30 minute, this is kind of where another confluence was on the 30 minute buy side imbalance, high to low. We reached into a discount. After that, we were looking for longs. And the thing is, we swept this high up here. We never really had a closure on the 1 hour. That's a little iffy to me, honestly, but just no daily or weekly PDA right here. That's kind of why I'm just going to be waiting for that to form. This, the 15-minute time frame, we didn't really have anything on the 15. I think we should have been waiting for this low to get swept, then probably move higher. On the 5 minute, we had a 5-minute buy side imbalance, 3 candle formation. As soon as we made an inverse, we went up higher, break even. I cut it. 5-minute order block. We had a 5-minute inversion and a BISI down here, but I was waiting for this one because we had the order block overlapping with that PDRA, and we had a market structure shift. Standard deviations again, just targeting up here and never met the target. All right, ladies and gentlemen, this is going to be a final update to the road to funding. It's going to end here because again, you've read the title, we're down on the account and we lost it basically. It was a tough period during drawdown, but nonetheless, this is more than a learning experience for me. Just really understanding where my flaws are is not even in my system or anything in general. But once more, my systems aren't really the factor here. It's really me, the one that's using it, that is truly the one that is not using it correctly, at times not really finding the highest quality setup, and not really, during phase 1 we weren't really having a clear definition of what we truly wanted and how we should have been trading. Even though we did have our system and what we were looking for, we just didn't know how to set it up. And now I feel like I just have a complete focus on what I need to do to scale up as soon as possible, but it does take time, and it takes patience. And that's kind of what I'm going to tell you guys is I'm going to continue to, be charting in the Telegram and updating you guys on the market and all that. But on YouTube, I probably won't come back until I'm funded with a good amount of capital. I don't know how much, and I don't know if I'll update the Telegram with trade recap. I might just do commentaries and charting, and then eventually once I make a video here, maybe in a couple months, or a couple of weeks, then eventually I'll probably start doing trade recaps again in the Telegram. But as for right now, just really commentaries. I just know what I need to do correctly next time. And again, I'll probably update you guys when I'm at for a certain level, which I feel uncomfortable at displaying on the internet, of course. And this is the P&L for the month. You can see Friday wasn't really the best, which was today. Today is Friday. And then Tuesday, we took a L, which could have been avoided. We took multiple L's, which again could have been avoided. Monday of the 8th, you can see that was a $50 loss, which could have been avoided. And then Tuesday the 9th, $13 win, which again, really, we didn't really do anything bad there. But Friday the 12th, we could have won and being level-headed at a certain extent. We weren't really being patient enough. We were rushing it every single day, trying to find a good trade, passes the account. And same thing happened today. Not really rushing it, but we forced our intentions on the market, which usually isn't really a good indication for how you're supposed to be trading. And again, I'm gonna show you guys the trade, but this is kind of where it stems from right here, and I'm gonna go over it all in the Notion. But once more, I just plan on reviewing from June and July, and then continue again, go back on another phase 5k, phase 1, and just try to work my way back up from there. Of course, the risk management may be different, or my approach to the account may be different. Once I feel comfortable again, I had a better trade idea form, and if you were in the Telegram, you would have seen it. So it was the GJ trade, but we took this one. We didn't really have a 4-hour or a daily confluence going into the trade, and I just knew right then and there I was screwed. As soon as we didn't have the market moving in our favor, as soon as we were chopping around, that's when I knew. I was like, all right, yeah, I'm screwed. I was thinking about putting my stop to break even. I had originally wanted to hit right here to go break even, but I just left. I left the charts. I'm not gonna lie, it was too emotional, too much risk. Didn't want to be in front of the charts when it was moving like this, and I think I should have, because we would have probably prevented the L and just hit a break even right here. But nonetheless, it is what it is. We already had a clear confirmation that the market was not going to move in our favor with speed, since we didn't have a 4-hour PDRA nor daily. So the daily was down here. We could have waited for that. And then we had no 4-hour PDRA, but we had a 4-hour sweep, and that was really it. And then on the 1-hour, we had a 1-hour sell-side imbalance. So again, we could have waited for another sell-side imbalance to form, moving us lower to hit the daily PDRA, a bullish balanced price range. But when we entered, it was basically becoming an inversion. We had another 15-minute SIBI up here. That's kind of why I wanted to move the stop to break even, and then target another SIBI up here, and then pass the account with the profit target up here with the starting percentage. And then on the 2-minute, once we formed that 15-minute fair value gap, we were retracing. We formed a 2-minute inversion, and that's kind of where I entered. No higher time frame PDRAs to push us up higher. Even though dollar was a little bit choppy and it was moving lower, gold wasn't really moving with speed. USD JPY was moving lower because again, it had those higher time frame PDRAs, and this one really didn't. So that's kind of why it just wasn't really moving, and it chopped around. Even on the 15, you can see there's a bunch of chop right here. I already have the notes. I already have all of that. Now it's really just going to be working on the risk management, the psychology, and just choosing which setups are more quality, more high quality, and having more patience. Honestly, having more patience on phase 2 or when we're funded, because I feel like we get very, very impatient trying to rush into those confluences and forcing the bias, especially when it isn't super clear. And whenever you don't have like higher time frame PDRs backing you up, it just gets very low confluence while you're trying to make it a high probability setup, but it isn't. So again, all I plan on doing is reviewing, learning from my mistakes, fixing my system, just a little bit refining it. That's all. I already have it mainly refined. I just need to add a little bit more tweaks, and then that's really it. And I'll come back when I'm funded. May see you in a couple months, couple weeks. Who knows? Until then, peace.